Welcome to Markets Now. I'm Michelle Brook with Dave Chatterton with Strategic Farm Marketing. Mostly hired day with the exception of a few of the wheat contracts. Dave, let's start off with soybeans, 4-session up. How much of that was the higher soybean meal versus just the fact that we're continuing to see some corrective buying?
Yeah, I think it's both, Michelle. Certainly seeing the meal get back in the act. I think meal was kind of left out of the move yesterday. We had a big move in the oil that helped the soybean complex yesterday. That oil move tied, of course, the announcement of the environmental approval or the EPA approval for the Phillips 66 plant out in California. Very big plant, very important for oil. Meal kind of getting back in it today, but I think the backstory behind that that's also helping support meal and the soy complex in general goes back to South America. And we've kind of beat the size of this Brazilian crop to death, but more and more analysts now coming in that sub 150 range for that Brazilian soybean production as the early yields reports have been disappointing. And in doing so, we've seen a few analysts as low as 135, 138. That starts to change their export profile. And on top of that, we're also now getting some dryness developing in Argentina. It's not what I would call serious yet. We do have some rain in the forecast in that 11 to 16 day period, but the next 10 days is going to be rather warm, weather dry. We're going to see crop conditions kind of back up just a little bit, and the need, I think, during those first few days of February for rainfall in Argentina is going to be very important. Everybody, I think, still fresh in the traders' minds, what happened last year and just how bad those yields were and maybe how sensitive they could be during February and March.
So we took out last week's highs, but how much higher do you think we can go with this market here before we run into some bigger resistance?
Yeah, I think you're looking up into that 1260, 1270 area for the March contract. That sounds like a long way away from where we're at right now, but considering the move that we've had on the downside, that's kind of your first, stop for the bus along the way here. And, it'll be probably a process here to carve this out. But we have to keep in mind that funds have gotten short here. They're certainly much shorter in the feed grain complex than they are in the soy complex right now in terms of outright soybeans, but they have made a big swing. You're talking about a position that was, 80 or 85,000 contracts net long at the end of November or late in November. That swung to 80 or 85,000 contracts net short here to start this week. So certainly, unusual activity this time of year for the funds, and that short position I think is a little bit vulnerable here considering, it's been well worn and we're stretching the limits.
Yeah. Corn, only 0.75 cents higher, Dave, and it just looks like we're kind of in a consolidation pattern here.
Yeah, Michelle, as we talked, earlier, it's kind of that little train that could. We're trying to get up that hill and haven't been able to quite do it yet. A lot of slippage here. We haven't had a lot of luck finding traction below 440 in the market, so that's nice. We also haven't had a lot of luck finding much traction in the upside above that 446 to 450 area. And there's a little bit of a chart pattern that the downtrending channel that goes all the way back into last fall or late last summer kind of comes in at that 446, 450 area. It's providing a little bit of resistance here. But I think the difference, we've seen good performance in the soy complex so far this week. I think the corn is lagging just a little bit because of the room and the space and the excess supply in the balance sheet, corn versus soybeans. When you look at that soybean, particularly for old crops, still a relatively tight situation. When we look at it for corn, we know we've got a little bit of room there. We know that farmers probably still have more corn left to market and sell into this market than what we find for soybeans.
Yeah. So the wheat market, we ended mixed there, and it looked like maybe there was some spread unwinding going on today. But, KC wheat has been on the short side here because the crop conditions are just better, right?
Yeah, they have been. And I mean, just not a lot fundamentally, bullish that we can work with here, whether it goes back to last week's USDA report or whether we talk about, just what's happening with the weather. Not much we can say about crop conditions at the moment, but certainly they're in better shape than we've seen in previous years. And again, I think the market, the wheat market here, a little bit of a follower here in terms of, we had a spat of exports. That market seems to have calmed down, or that portion of it seems to calm down. And right now we're looking for direction, I think, outside of that wheat complex to the corn and to the soybeans for some leadership.
Yeah, and the dollar being higher today probably didn't help, did it?
Yeah. And I mean, this outside market's always going to be an influence, particularly in wheat. Wheat is the most international, I think, of the markets that we have.
Nice day in the cattle market. Are the funds coming back in here to play, or is this because we've had this big push in the choice cutout values here for the last couple of weeks?
Yeah, I think that push in the choice cutouts caught a few people off guard, and we're starting to get the chart, reaction to that, which has got the attention of the funds here. That fund position in cattle got bled down to basically a very small net long. Funds have some ammunition here. I think the performance of that cutout, and all of a sudden seeing the packer margins move into the positive at a time when we thought, hey, coming off of these winter storms, We were going to see, the slaughter rates and the change feeds pick up. We were going to see heavier weight cattle start to come in. Production was going to go up, and demand may not have been there to pick it up. We're finding just the opposite, a very strong move in the cutout, above that 300 mark here on the midday today. And, that's, I think caught a few people off guard, and kind of a few of these funds that were leaning short that got neutral, kind of pulling back into the game here. Very nice, move on the chart here today.
Yeah, no doubt, especially like the April contract. It looks like we're having a bit of a chart breakout there, you think?
Yeah, I think cattle and hogs both are seeing
Oh,
probably better performance in the hogs, but certainly, like I said, we're getting some legs under us here in the beef complex. I think my own expectation was it would be a little bit of a tough climb on the way up, but I think we've caught a few people off guard here, and all of a sudden, it's a second look in terms of these large specs of how this thing might look going into the spring and what the consumer demand might be.
so hogs, again, like you said, a chart breakout there, but we've also had stronger product values getting above the $90 mark on cutouts for the first time in a while. That's also helped to push us, but how far can you really push that market, do you think?
Yeah, it's a good question. I mean, funds had actually gotten a little bit short in that hog complex, so they again have some ammunition there as well. It's a little bit unusual for them to do that, especially this time of year. It's been a nice rebound. I think when you talk about how much we can ask for, on the upside, I think those questions are very valid, and I would be a little bit cautious here. This market is always going to be volatile on the hog side of the swine side of the complex. When we look at what's happened here, big breakout today in that April contract. I mean, it's the most heavily traded contract right now, and broke out, not only to a new high, not only to the highest level that we've had since going back into, I think, early November, but also looking at a situation where there was a pennant formation there that we have now, added on to, and there's a chart measurement there that gives you some upside. And so all of a sudden the technical trade and the spec trade starting to pay some attention there as well.
Well, I'm impressed considering we probably backed up some hogs with these slow chain speeds, didn't we?
Yeah, I think that was the expectation, and we just have not found that as yet. These chain speeds look like, they are going to pick up. I'm not sure what we're going to see in terms of weight here in the nearby, but the front end fed cattle supply, or front end, supply that we have there, as well as the hog supply, looks very plentiful here. And I think that's where these question marks about how far we can expect this to go in terms of a fundamental basis are really going to come in.
Thanks so much for joining us. Dave Chatterton with Strategic Farm Marketing.